everybody to the Employees Retirement System Board meeting on May 20th, 2020 at 12 p.m. This will be an electronic remote participation via GoTo meeting. And we're going to start with roll call. So first off, Chairman Calise.
Present.
Trustee Gordon.
Here.
Trustee Hamilton.
Here.
Trustee Miller.
Here.
Trustee Novak.
Here.
Trustee Bovensep.
Here.
And Trustee Malzik's here. Just to note that all 7 of us are here. Next item on the agenda is a resolution. The resolution reads, to allow members to participate in public meetings by electronic means during the state of emergency. Resolved that the City of Troy Employees Retirement System hereby allows all members to participate in public meetings by electronic means during the state of emergency. Members participating electronically will be considered present and in attendance at the meeting, may participate in the meeting as it is physically present. However, members must avoid using email, texting, instant messaging, and other such electronic forms of communication to make a decision or deliberate toward a decision. We need a motion on this?
Oh, you read the resolution, so that's a motion, right? I'll second it.
Okay.
Second.
Okay, I guess I moved it, second by Hamilton. Any discussion? Roll call vote. Trustee Hamilton?
Yes.
Trustee Gordon?
Yes.
Chairman Calise?
Yes.
Trustee Miller?
Yes.
Trustee Novak?
Yes.
Trustee Bovensep?
Yes.
And Trustee Malzik, yes. Motion passed 7-0. Do it differently the second time here. Does anyone want to move the next resolution?
I'll move.
Okay.
I don't have it written.
Do you want me to read it into the record, Rob?
Please.
Okay. Resolved that the City of Troy Employee Retirement System hereby establishes public participation rules during the state of emergency to provide for 2 methods by which members of the public can be heard by others during the meetings. Email sent to ERSP publiccomments@troymi.gov and received by 9 a.m. on the day of the meeting will be read during the public comment period of the meeting. Voicemail left at 248-524-3306 and received by 9 a.m. on the day of the meeting will be played during the public comment period of the meeting. Both email and voicemail public comments will be limited to 3 minutes each. And that would be the motion of Mr. Calise.
So moved.
I'll support that.
Okay, moved by Calise, supported by Hamilton. Any discussion? Okay, seeing none, we'll do a roll call vote. Chairman Calise.
You were muted. There you go.
Oh, I'm sorry. Yes.
A yes from Chairman Calise. Trustee Hamilton.
Yes.
Trustee Gordon.
Yes.
Trustee Miller.
Yes.
Trustee Novak.
Yes.
Trustee Bovensep.
Yes.
And Trustee Malzik, yes. Passes 7-0. Public comment. Let's see. Shazia, do we have any public comment?
No, none.
None. Hearing none, we'll move to the next item. Minutes from the March 11, 2020 meeting. Can I get a motion?
I'll move to approve.
Go ahead.
Motion by Mark Miller. Can I get a second?
Support.
Support by Trustee Hamilton. Any discussion on the minutes? Okay, seeing none, we'll do a roll call vote. Trustee Miller.
Yes.
Trustee Hamilton.
Yes.
Trustee Gordon.
Yes.
Chairman Calise.
Yes.
Trustee Novak.
Yes.
Trustee Bovensep.
Yes.
And Trustee Malzik, yes. Item passes 7-0. Next item is retirement requests. We have 3 retirement requests William Sanders, Janice Hines, and Jeffrey Oberski. Lisa, is there anything you want to add on these items?
No.
Nothing? Okay. All right. Does anyone,
Excuse me, can I, would like to have acknowledgement of thank you for the 3 employees that are retiring for their long years of service.
Yep, Mr.
Thank you,
Oberski,
Chairman
30
Cleese.
years, Ms. Hines, 25 years, Mr. Sanders, 19 years. It's quite a lot.
correct.
I'll make
Can
a
I get a
resolution.
motion?
Retirements. I'll move to approve the retirements, all 3.
Okay. Can I
Support.
get a second? Support by Bovensup. Okay. Any discussion? All right, let's have the vote then. Trustee Miller,
Yes.
Trustee Bovensup,
Yes.
Trustee Novak,
Yes.
Trustee Hamilton,
Yes.
Trustee Gordon,
Yes.
Chairman Cleese,
Yes,
Trustee Melzik, yes. The retirements pass 7-0. Moving to the next item, regular business. Just wanted to mention that on the election results, Kurt was elected to serve as a member of the ERS and RHC board for a term ending December 31st, 2021. So just wanted to say welcome to Kurt and thank you for your service on this board. Next, want to talk item for request for reimbursement to city in the amount of $4 million in June of 2020 to have $2 million each from Morgan Stanley and UBS. Just to give a little bit more information on this item, we basically, the city pays about $1 million out of the general fund to pay for benefits, and then this is just our reimbursement from our board, our funds for the pension to pay these to pay our beneficiaries. So from that perspective, I would like to get a motion in a second.
Do we have, I guess, have we decided how we're getting those funds yet? Are they available in the cash accounts, or is that going to be discussed later?
Yeah, I thought we would, I guess we can do those as resolutions as well, I guess, throughout the meeting. It's your choice. How do you want to do that?
I don't think there's an action we do yet until we get to that point, I think.
Okay. All right, so we'll move on then to the next item. The next item would be Graystone Consulting, and Tim, if you could go through what you want your rebalance, what your recommendation is for the rebalance of the $2 million.
Mm-hmm. That was part of what I was going to touch on. Do you want me to start with that?
Sure.
Okay.
Well, I mean, go ahead. So just start with your presentation, I guess.
Yeah, and I know that you're not going to be able to put up these slides, but from the information that got sent out by Shazia on May 14th, there's 3 or 4 slides I'd like to review, give you a performance update, and then tell you where we would take the cash from. So if everyone's got that material that she sent out on May 14th, I think it was at 2:02 when the email came out. The page number that I'd had to start with is 93. Does everybody have that information? I thought it would be better to look at some slides than hear me drone on about our views on the market, I guess. So if you've got those slides, the first one should say deepest recession since World War II.
Yep.
Everybody see that?
Yes.
So our view is that, this basically kind of shutting down of the economy is going to bring on a very steep and deep recession here. And you can see on that chart, it's compared to 08, 09. And you can see that it's obviously going to be worse off than that. But there's been a couple of things that have gone on. One, the Fed has been very accommodative. So they've lowered interest rates to around 0. They've decided they will do unlimited quantitative easing, like they did back in 08, 09. But what's different about it this time is instead of just buying treasuries and mortgages, they're actually going to expand their palette they have. And they're going to buy corporate bonds and high yield bonds and muni bonds. And they've even gone on record to say if need be, they would buy equities. And that's unlimited, and they've moved very quickly to do that. That's the part of this policy response that we've seen, that we expect to see a bounce back. As you can see on that chart, that would be more V-shaped. So fairly quick bounce back from this as we reopen the economy. And then the other part of it is the CARES Act. About 2.6 trillion, that's a T, trillion dollars that the government has brought forth in fiscal policy. In fact, if you go to the next page, 94, and you look back historically as a percentage of GDP, that's the blue line on page 94, you can see the only time previously in our history that there's been a policy response like this, any greater than this, was World War II. Not the Great Depression, not the Great Recession of 08-09. And we still have a feeling that there's more that they may do. So I get the question all the time, you show a V-shaped recovery, what happens if this reopening of the economy doesn't work as well as we would like or go as smoothly as we'd like? And that's probably going to be the way that it is. Our view is that you would probably see another $1 trillion done by the government in terms of fiscal policy. Now, they passed something on Friday that was $3 trillion. We don't expect to see that actually pass through the Senate, though. But we do expect here probably in the next month or two, there might be an additional $1 trillion. That would get you, down to a level 22, 23% of GDP. So that policy response, both through the Fed and through the fiscal policy changes, is what's got us believing that you'll see this bounce back in the market. If you move to the next page, on page 95, the chart there just shows you that big oval in the middle. That's the lost decade. That was a long-term or secular bear market. We believe we're still in a long-term bull market, but within that, you can have those smaller circles like you see on there, both in the bull market prior to the lost decade and since. Those are short-term bear markets, cyclical bear markets as we call them. And we think this one ended with this recession that's come on to us. And keep in mind, recessions usually mark the end of a bear market, not the beginning of one. So we think the cycle starts all over, but we remain in a long-term bull market. And you can see in both of the past bull markets, there were, those shorter-term bear markets that were included in that time frame. The next page is 101. And it's a graph that looks at our equity risk premium. And it's really our gauge as to whether it makes sense to own stocks based upon what premium we think you're getting for the risk that you're taking. And you can see that yellow line on the chart. It peaks at different times when there's problems in the market. So Brexit's on there, and manufacturing recession, and obviously this most recent event. That yellow line moving up like that means the premium that you're getting for the risk that you're taking in stocks is elevated. It's really good. It's really the distance between the top of that yellow line and that red line down toward the bottom. The closer you get to the red line, the less premium you're getting for the risk you're taking. You wouldn't have seen that yellow line like that if you went back further than this chart does, probably since 08-09. And if you think back to 08-09, March of 09 would have been a perfect time to be, if you had any cash, putting it in the equity market, right? But it's very difficult to do that sometimes, even though that equity risk premium looks really good. Well, what you've seen is, you see how the yellow line has come down? That's the market bouncing back off of those lows that we saw. There's another part on there, though, that blue line, that's volatility. As you can see, volatility usually spikes up when the equity risk premium moves up, because it means we've had some issue, some dislocation in the market. And we do believe that as volatility peaked out, you were definitely seeing some of those computer programs come in and sell and kind of exacerbate the downside. There was an unwinding of leverage that was in the market and other things. But the good news is, as we were starting to see the equity risk premium come down, we still see it's pretty healthy. There's still a pretty good margin there. So stocks still look attractive. And as volatility comes down, and we started to see that, what we should start to see is those same computer programs that, based on volatility, that we're selling. As volatility comes down, they should be buying. Okay? And that should be helpful in this rebound that we're seeing in the market continue in our estimation. And then there's one last page, it's 104. And its small cap underperformance has been historic. So right out of the gate, when we saw the pullback in the market and we saw the equity risk premium move up, for those clients of ours that were rebalancing, we said there was 2 areas you could rebalance to. Large cap growth, which has actually gone now positive for the year, so we don't think it looks as attractive anymore, but it did for a while there. And the other area is small to mid cap stocks. Because of this chart, you can see historically versus large cap stocks, they look really attractive. Now, why did they sell off or why did they not perform as well? Because people don't usually like smaller companies when they're worried about the economy. But if we're right and we get that V-shaped recovery, it's smaller cap stocks, small to mid, that should do much, much better. So from a rebalancing standpoint, this is one area that we're still telling clients looks like the valuations are compelling and attractive. I just wanted to show you that chart that kind of backs that up. Just to give you an update on performance, and this is for our portfolio. You got a pen or pencil handy? Month to date, so here in May, portfolio is up 1%. Quarter to date, the portfolio is up 9%. And so that puts you year to date down about 9%. In dollar terms, that's about $9 million. So the portfolio has definitely come back nicely. And then to compare that $9 million kind of pullback that we've seen so far year to date, remember last year you're up close to 20% on the portfolio, and that was a little over 16.3 million. And our chief investment officer who put together these slides, his view is that markets in our base case and in our bull case end the year higher than where they are now. And even in the bear case, you would see now, based upon the progress that's been made and the policy response that we've seen, that you could see at worst a pullback of maybe 8 or 10% from here, but we would not believe that we would retest those lows that we saw before. A lot of that had to do with the leverage that was built up in the market that has since washed its way out to a large extent. Rob, to touch on your point about the rebalance, in looking at the portfolio, there is enough in cash right now to cover the $2 million that you would need by June. So we would just pull it from that part of the portfolio when it's necessary that you need that. Okay?
Okay, thank you, Tim. Does anyone have any questions for Tim? Okay, seeing none, does anyone want to make a motion to distribute that $2 million from our cash?
I'll make that motion, $2 million from the Graystone cash.
Okay, and I need a support.
Support.
Support. Any discussion? Seeing none, let's do a roll call vote. Trustee Hamilton,
Yes.
Chairman Calise,
Yes.
Trustee Gordon,
Yes.
Trustee Miller,
Yes.
Trustee Novak,
Yes.
Trustee Bovensep,
Yes.
Trustee Melzix, yes. The item passed 7-0. Thank you, Tim. Appreciate that. Moving to the next item is Becky from UBS.
Hi all, I hope you're well and if all of your families are well. To all of you who are first responders out there, thank you. I know this has been a difficult time and we've had some additional issues that have come up with child abuse and spousal abuse, kind of a little bit more than what they have been. And also living outside of the city of Troy, I see a lot of people speed racing on the street. So thank you for taking care of that as well. So thanks for being out there with us. Loved what Tim said. Tim, I will say your firm is probably a little bit more optimistic than UBS. I think we're still a little bit cautious as to where we are in the COVID response. Obviously, it's hit the economy pretty hard. We're very concerned about unemployment. Another 3 million people add to the rolls last week. Currently, we've got about 36 million people drawing unemployment. And when you compare that to the recession of 2007 to 2009, we're about 8.7 million. So we think we have a ways to go to come out of this, but we also think that you don't bet against the U.S. We've had a lot of crises in our history. We've had pandemics that we really even don't remember. We've had wars and we've had other economic issues. So we think that long term we will come out of this. We're just not quite sure how quickly the economy can recover after we get back to some sense of normalcy. We're also looking at possibly a V recovery, and that might be if we end up or social distancing and some of the measures that we've taken allow us to get back to where we were, but we think that's going to be a slow process without a vaccine. We're a little concerned about a W recovery, meaning that we kind of go down, come back up over the summer, things start to normalize, and then we have a pullback again if this virus resurges a little bit stronger than it was before. That being said, I think long term we are very optimistic. As Tim said, interest rates are basically at zero right now. We expect that they will be low for many years to come. Looking at the 10-year Treasury at probably about 74 basis points by the end of the year. So really not getting anything on bonds right now. Inflation we don't see as a problem, but that really then requires a lot of return on the equity side of these portfolios. So we continue to be a little cautious. Expect, certainly no positive GDP growth this year, probably hoping for positive next year, but we really think that we're closing in on the end of 21 to 22 before we see kind of a normal pre-COVID activity back in our economy. In some economies, we're going to see some big changes. I see all of us at home. I suspect that I will be home for quite a while. I suspect that Tim will probably be too. I think that a lot of the financial firms have made the decision to try and keep people at their homes for a while. And I really do wonder how that will change the economy long term when we look at real estate and some other things. I think my firm especially is thinking that, gosh, if we can have a lot of people sitting at home, why do we need these huge buildings all over the world that we're paying a lot of rent and mortgage money on? So I think we'll see some changes. I think we'll see some positive changes in healthcare. Telemedicine certainly is here to stay. I think we'll see a lot of innovations in those fields. So we'll have some winners and some losers, as we all do whenever we have crises of this type. But again, I think the best thing for the city of Troy is keep the asset allocation that you have currently. We'll look to, after I finish this with the returns, have some commentary on taking some money out. But again, you've got nice equity allocation, and that's really where we're looking to get returns once we come out of this. UBS just changed our capital markets assumptions. That's where we look at the different asset categories and try to give some thought on returns moving forward. We don't do this often. We really do it as we see changes in the economy. We actually did this in February of 19, so it's unusual that we're doing it again this quickly. Last year we did it when we saw a growing, kind of a slowing in the economy, thought that the market was getting a little top heavy, so we reduced our returns for equities down to about a 7% annualized rate of return. Even with this pullback now, we're keeping that 7%, but we really have reduced our returns that we expect for fixed income for the foreseeable future. So again, not looking for much in fixed income, really looking for equities to do well after we come through with this. But if you want Shazia to pull up the returns, we can start with ERS and the NIC combined summary. That would be page 1. I don't know if everybody can see that. If not, I'll just basically let you know. So month to date, I have through April, so that would be the entire month. The combined...
It's page 144 in the packet. We have a packet that we got emailed last week, so it's page 144.
So for May, month to date, for the ERS, we're up 1.06. For the month of April total, you're up 10.35%. Year to date, for the total ERS and NAIC together, you're down 7.58%. The 1 year trail, you're down 0.08, so basically flat. your 3-year, 5-year, 7-year, and 10-year performances all still look quite good and still are outperforming your 6.5% benchmark. So the 3-year average, 7.84 through the end of April, 5-year, 6.74, 7-year, 7.97, and the 10-year, 8.55. So still pretty good returns, even with this pullback that we had certainly in March and then the recovery that we started to see in April and May. Rob, do you want me to go through the two portfolios separately, or do you just want this overview that I've just given on the total?
I think that's good, Becky. Thank you. Yeah, you can
Okay.
go to your allocation, your cash suggestion.
Okay, so currently right now we have cash on hand of $1,598,000. So we really only need to take $402,000 out. As I look, however, at the stocks, did have some suggested perhaps sells in the NAIC account. These would be based on outside performance and research from the Center for Financial Research and Analysis, CFRA, which I always review against the holdings as well as I do for UBS. UBS doesn't cover, as you know, a lot of the NAIC holdings. So CFRA has recommended sales on Allegiant Travel, Eagle Bank, IAA, which is an auction service for damaged vehicles, Nexstar Media, which is a media company that owns television stations throughout the country. Most of these are very small. There's one in Michigan in Lansing, one in Grand Rapids. IDEX, which is an applied solutions company, and the Old Dominion Freight Line. Now, these in total, based on the flooring prices, if you were to sell all of these, it would raise $1.6 million, which obviously is more than the roughly $400,000 you need. But I think based on our uncertainty of the winners and losers in this virus, I think maybe it makes some sense to have a little bit more cash put away because, again, we'll be needing more money in December. In the event that you don't agree with those suggestions, then we would suggest you take the roughly $400,000 that you need from the Loomis bond portfolio, intermediate bond portfolio. And then we also had some option recommendations that came to you as well.
That is page 140 and 141 that has the two things you just discussed.
Thank you, Dave.
Yep. Yeah, I'm leaning towards the first option you suggested, which is sell those 6 stocks and hold the cash for the December. I'm more of the, I wouldn't say pessimistic look, but I'm more of the, there's a lot of uncertainty coming ahead. And so I like that option. We'll see how the rest of the board feels, but because the other option is just, like you said, the Loomis sales bond, grab the 400 from that and go no cash. So my preference is sell the 6 stocks as the NAIC paper recommends, and then hold on to the cash.
So is that a motion on your part, or is this just?
Yeah, I'll make that a motion. We sell Allegiant Travel, Eagle Bank, IAA, Nexstar Media, IDEX, and Old Dominion Freight Line, and use the remaining cash to fund the $2 million. That plus the remaining cash to fund the $2 million that we need.
We have a motion. Do we have a support? I'll support that as well.
I'd like to hear from everyone else where they're at, see if we have a majority that supports it.
Justin, go ahead.
Thank you. When the packet came out a week ago, I went through all 6 of these stocks, and I mean, they were all middling, except for Old Dominion, which had rebounded. I think it was $10 below its all-time high, and I looked this morning, and it's at an all-time high this morning. And then I have, the ghost of Milt Stansberry talking behind me. That not literally, he's not here, but common sense. Yeah, but common sense that in this new age of mail order and shipping and trucking, I mean, I'm hesitant to get rid of the Old Dominion that is hammering ahead, and with what I perceive as the economy coming down the pike, at least in the short term, the amount of freight that's going to be going, I I'm good getting rid of the first 5 along with NEIC. I'm hesitant on a South Old Dominion. I think we should hold on to that. My 2 cents.
Gotcha. How much is in Old Dominion? I think you said it's 1.6 million total with the 6. How much of that is Old Dominion? I don't have that.
This morning it was about 483,000.
Okay.
And if anybody wants, I do have the research reports. I didn't send them on to Rob. I can send them if anybody wants to see them, just again, knowing that this was going to be a shorter meeting. I will tell you, Justin, that as I looked at all of these, I was pretty convinced on the first 5, the Old Dominion. I actually struggled on 2. The research report was looking at a huge decrease in their 1-year price target is substantially less than where it is now. And I just felt compelled that that needed to be discussed.
Yeah, if you want to, Justin, you can make a motion to amend, and then we could put it to a vote if we want to only sell the first 5 and then keep the rest in cash, use the 401k, and keep the 450 in Old Dominion. If you want to make that motion, we can just get a vote. I'm going to vote no, but still, if a majority supports it, then I'll go with that in the final vote too. It's up to you.
Did anybody else have discussion on that?
Mark, go ahead.
I would accept selling what is felt to be sold in the NAIC, but I'd like to see the cash stay there to be reinvested in some of the NAIC recommendations as we feel comfortable. So I would, again, if the recommendation is to liquidate those 5 stocks, I would support that, but rather not see the money come out of the NAIC or come out of the other fund.
So just for conversation's sake, the NAIC portion of the total that we hold at UBS is now about 23%. So it is a bigger and bigger portion of that portfolio. You know, we do have a fiduciary obligation to make sure that we have a balanced portfolio. So as that gets larger and larger, and that means we need to reduce some of the other equity holdings on the other side, which in many ways I feel more comfortable with. I have better research on them. I'm able to keep better track and follow them more closely. So I think that, you know, we are no longer in a world where we can have dividends and interest income annually compensate for the withdrawal from this. We have to be taking from principal. And so as we do, I think it's just important to not necessarily always take from NAIC, that's not what I'm suggesting, but always take from those areas where we see the most risk. And I just want to be really thoughtful and again bring that up to the group that that as we look to take, we're looking at things that we feel are the most risky. And right now, we still do feel that there's considerable concern for the economy and for the market throughout the rest of the year. I kind of think of it as we're in a tunnel right now. We may be seeing some light right now at the end of that tunnel, but we're not even sure if it's from the end of the tunnel or if we've got, you know, a few holes in that tunnel. And we've got a lot of twists and turns between now and the rest of the year. I would not myself want to be making a thought process that I suspect that will be positive in equities before the end of the year. I just don't see that. So I think that there's some value in cash right now.
Okay, my thought is, as Becky has said, this is up to 23%, I believe you said, of the total portfolio. Pardon me?
Of UBS's holdings. So obviously when you look at what UBS has and Morgan Stanley together, it's a smaller percentage.
Okay. But there's a reason why that percentage has been increasing, and I would lay that to the performance that has come out of the NAIC. So I understand, Becky, UBS concern on this. NAIC has done extremely well. And if need be, split that into another account with UBS if you could handle it, or we could find another financial companies just for diversification. And that, as long as I've been on board, that's been a reason for having the NAIC is follow them, let them see what kind of performance they're doing and compare that to our other money managers. So that is the reason why, if in fact the securities should be sold, sell them, but leave that cash in where the NAIC will give us advice in the future or now on other stock recommendations.
Mark, just one thing to comment on is that part of the reason why that percent's gone up so much is because, at least in the time I've been here, we've taken our distributions from the other portion of the UBS portfolio. So it isn't just because of performance. Mark Miller, did you have a comment?
Yeah, comment and question. Procedurally, where are we at? Have we had a resolution? And was that resolution?
Yeah, I put up the resolution to sell the 6 stocks, take $400K towards what we need for the distribution, and then the rest leave it in cash for now.
Where is there a second?
I support
Rob
it.
seconded. Yeah, so that's what the motion that's on the table up for discussion. So any of these changes that Justin or Mark suggested would have to have an amendment to it.
Okay.
So if someone wants us to move a specific amendment, we could do that and vote on it and see where we're at. But yeah.
Mark Miller, did you have anything else?
To put forward the
Okay.
amendment.
Tom, did you have something?
Yeah, real quick. I'm leaning towards Justin's recommendation, so I'm going to be voting no on the original motion. And if Justin wants to move his of selling the top 5 on the list here and keeping Old Dominion, I would support that.
And then would you support just
That makes sense.
Yeah. Would you support then just leaving the rest in cash for now? I mean, we can always at a future meeting do something else with that cash, but just for now, leaving it in cash.
Yeah, I mean, I like the idea of having cash on hand, and I guess we could reassess if we want to put that money back elsewhere at a future meeting.
Okay. Mark Miller?
We also could accomplish this by amending the resolution, correct?
Yeah, and I think that's probably the best option because it's just one slight change. The only difference would be we don't sell the Old Dominion. And otherwise the rest is the same. Yeah.
I'm in favor of the amendment.
I'm sorry, Mark?
I am in favor of an amended resolution.
Okay.
All right, I'll get it on the table. Just I'll amend my resolution that we just don't sell Old Dominion, but still sell the first 5: Allegiant Travel, Eagle Bank, IAA, Nexstar Media, and IDEX, and then leave the remainder in cash and take the $2 million from the total cash pool. So I'm moving a motion to amend my original motion.
Okay, I'll support that.
So we would need to take a vote on the amendment, and then if it passes, then we would take a vote on the final amended motion. Does that make sense to everyone?
Yeah. Yep. Trustee Hamilton.
Yes.
Trustee Gordon.
Yes.
Trustee Miller.
Yes.
Trustee Novak.
Yes.
Trustee Bovensepp.
Yes.
Chairman Calise.
No.
Trustee Malzik, yes. So that passed 6-1, the amendment.
Right. So now what's on the table now? So now the motion, all that did was amend the motion. So now it's just sell the first 5, leave Old Dominion, take the $2 million from the total cash pool from the cash we had plus the cash from the sell, and then leave the rest in cash. That's currently what is on the table. So if anyone else has a comment or wants to do any further amending, that can happen now.
Go ahead, Justin.
Just a question, because I'm looking at the dollar amounts. So there's some cash in NAIC now, and the rest will be coming out of UBS proper, correct?
Correct. Yes.
Okay, so,
1.61.
and I would have to agree with Chairman Cleese that, you know, we have said in the past, NAIC is not to be touched, yet we keep circling around and touching it. We do need to hack that out, and I don't think this format is best for that. So I'm sure we'll all look forward to that discussion.
Okay. All right. So to call the question, Trustee Hamilton,
Yes.
Trustee Novak,
I'm sorry, what are we voting on now?
This is the final.
And we're going to take the cash from both pools?
Yep.
Okay,
Call
yes,
the 5 and take the cash out. Yep.
yes,
okay, Trustee Miller,
Yes.
Trustee Gordon,
Yes.
Chairman Cleese,
No.
Trustee Bovensep,
Yes.
Trustee Melzik, yes. The item passed 6-1. On to the next item, other business. Does anyone have anything they want to bring up for other business?
Rob,
So there's those
Bob?
option recommendations, right?
Oh, I'm sorry. Yeah, my bad. Go ahead,
Do
Becky.
we have to make a motion on that? or-
typically, it's just, Rob, you bring it to the board's attention, and it's almost always a yes. So we think options make great sense right now in this market. It brings some cash in. The stock prices that they would perhaps be exercised are well outside of where they're trading now. So we think it's a great idea to move forward with these. They are in compliance with your investment policy statement.
Okay, thank you. And that's on page 141. Can I get a motion?
motion to accept the recommendations as presented.
Support.
Motion by Justin and support by, I'm sorry,
Hamilton. Yep.
Hamilton. Any discussion? Tom? No, okay. All right. Trustee Novak,
Yes.
Trustee Hamilton,
Yes.
Trustee Gordon,
Yes.
Chairman Cleese,
Yes.
Trustee Miller,
Yes.
Trustee Bovensep,
Yes.
Trustee Melzik, yes. Item passed 7-0. Thank you, Becky. Is there anything else?
No, nothing from me. Thank you very much.
Okay, thank you, Becky. Moving on to other business. Does anyone have anything else? Chairman Cleese.
Just have a question about the next meeting. When will you know if it will be done again in this process or we'll meet in person?
I'm
I know
going to
that-
defer to Lori Bloom.
So they have allowed, the state of Michigan's orders have allowed meetings to take place electronically throughout the month of June. However, there is a mandate that any necessary business that can be postponed until in-person meetings are allowed should happen. So certainly it's not our preference. This was one where we needed to take action, so we needed to have this board meet. So I don't know the answer to that. We're hoping to get back, but things change on a daily basis.
Go ahead, Mark.
Is a June meeting necessary under these conditions?
That's the thought, is that if there's an ability to cancel it or postpone it, then that is our desire. Again, I don't know at this point whether there's any necessary action that would require a meeting to take place.
So we'll be given a couple weeks' notice on what procedure is going to be taken? Is that
Yes.
correct? Okay,
Yes.
thank you.
And then, Rob and Lisa, is it your thought that you'll go back to that second Wednesday just for our calendar's sake?
That's when the next meeting is scheduled, is the second Wednesday. but just like this one, this was our first one, so we had to delay it a week, but as of now, we'll have to decide in the next week or two what we want to do. Correct, Becky?
Okay, but we should keep that second Wednesday though, probably versus the third.
Right. Mark, did you want to say something?
Just
Trustee
to
Miller?
follow, I mean, right at this moment, we don't know of any action that has to be taken. Is that correct, Rob?
That's correct.
Yeah. So it's like, you know, it would not be a surprise if the meeting is canceled.
Does that answer your question, Becky?
Yes, I just wanted to make sure that if I needed to put both the second and the third to hold those on my calendar, I did. But if you knew that it would, regardless if we were going to have it on site or off site, that it was going to be the second, then obviously I'm just going to hold that Wednesday period. If that makes sense.
Okay.
Not that I'm traveling much, doing any fun things in the middle of Wednesday afternoon, but
Mary?
Rob, perhaps I missed it, but did you have a motion to reimburse out of the UBS funds, to reimburse the city out of the UBS funds?
Yes, we did.
Okay, all right, I just wanted to make sure. Thank you.
Okay. Any other business anyone wants to talk about? Okay, well, thank you very much. We will adjourn. Thank you very much, guys, and we'll see you soon.
Take care, everyone.